We begin with Chapter 1, the technology and the coins. In this chapter we will cover common terminology, the history of where this technology came from, the possible ways the future can unfold, the characteristics and other points to remember about cryptocurrency trading, and we end the chapter by reviewing top crypto coins in the market. The entire cryptocurrency world begins with blocks. Blocks are packages of data. The critical thing to remember here is that these blocks carry permanently recorded data. As transactions happen, information for each transaction is collected, then validated by the network. Eventually the data will reach a predetermined size, and then be combined into a block. As these blocks are created, they don't continue to exist alone and separate. They become linked with other blocks. And this is what we define as a blockchain. A blockchain itself is a file, a shared public journal or ledger of cryptocurrency transactions. And it acts as a historical record of those transactions, from the first block in the chain to the last, continuously growing. A blockchain protocol runs on a peer-to-peer network of computers that all run the protocol and hold an identical copy of this ledger. Whilst it is public and therefore everyone can inspect a blockchain, no single person can control it. It is cryptographically secured from being tampered with. Cryptocurrency has been given a few different names. Digital tokens, or sometimes just tokens, digital assets, digital currency, crypto coins, virtual currency, digital coins, and so on. But essentially, cryptocurrencies are just a type of digital asset, used as a medium of exchange. They are all stored in a blockchain, with each blockchain having its own digital coin. The original and most widely known cryptocurrency is Bitcoin. The term altcoins is used to define all other cryptocurrencies. For example, Ether, Litecoin, Monero, Dash, Zcash, and so on. And each one has its own properties and functions. Historically, traditional currencies are backed by a physical commodity, like gold or silver. Fiat currencies, like the US dollar, are legal tenders declared by governments that are based on the relationship between supply and demand and the credit of the economy. It doesn't have an intrinsic value of its own. It is just paper or physical coins made of low-value materials. Because of blockchain technology and the way cryptocurrencies work, you are purchasing what could be considered as a tech stock. The term cryptocurrency is derived from the combination of cryptography, which is the practice of or techniques for securing communications, and currency, which is money in any form. However, cryptocurrencies do have more in common with stocks than they do with currencies.